Access India Manufacturing Fund NFO. Will this NFO add more returns to your portfolio or will it add more risk to your portfolio? Can we do a detailed analysis? Welcome. This NFO is open till 15th December 2023. This particular NFO comes under equity scheme manufacturing theme. This is a thematic fund. Benchmark for this particular NFO is Nifty India Manufacturing Total Return Index. Minimum investment for this NFO is just 500 rupees. Fund manager is Mr. Nitin Arora. There is an exit load of 1% if redeemed before 1 year. The key objective of this particular fund is to generate long-term wealth by investing in manufacturing thematic equities. To whom this particular fund is suitable? This fund is suitable for aggressive investors who are really bullish on manufacturing theme. That means there are two conditions you have to satisfy. One, you should be an aggressive investor who is willing to take more risk, higher risk, not conservative investor. Second condition is you should be bullish about manufacturing theme. That means you have done your own homework analysis. You found logics, reasoning to invest in manufacturing theme. You feel that manufacturing theme based equities are available at attractive valuation. The outlook seems to be brighter. Only if you are convinced based on your own research and analysis, then you can invest in this fund. Then this fund will be a suitable fund for you. As we have seen the key features of this particular fund, now we can move on to the analysis part. In the analysis part, first we will understand what are all the potential advantages, merits of this particular fund. This fund is reasonably diversified among top performing companies in the manufacturing theme. Though the diversification is limited, but it is diversified among the top performing manufacturing thematic equities. In your overall portfolio, the manufacturing theme equity allocation is lower and you want to increase the allocation for manufacturing theme, then this fund can be one of the options for you. If the manufacturing theme really performs very well and delivers good results, then obviously this fund can deliver more returns and can add more returns to your portfolio. Because this is a thematic fund, this comes under high risk and high reward category. This fund is suitable for aggressive investors who are really bullish on manufacturing theme. If your logics and reasoning says manufacturing theme outlook is brighter, then this fund is an obvious choice for you. Okay, we have seen the potential merits. Now is the time to understand what are all the potential demerits of this fund. Because as an investor, you need to over focus on what is the risk involved in these schemes. Access India Manufacturing Fund NFO is an equity fund. So it is riskier to park your short-term money here. Only if you are a long-term investor and only you have long-term money, then go ahead and invest in this fund. Long-term means here 7 to 10 years time frame. If you have got 2-year, 3-year kind of money, please avoid this NFO. This fund is not suitable for your core portfolio. For your core portfolio, large cap funds or flexi cap funds are better choice. By experience, we have seen that not all great themes translate into stock market returns. Some themes create a lot of hype, but will they translate into returns? Most of the times, no. So we have to be really careful whether this manufacturing theme will really convert into results or not. Because you are concentrating your portfolio on one particular theme, you are overexposing your portfolio to negative triggers a lot. Compared to a diversified equity fund, this fund is not flexible and dynamic. In a diversified equity fund, the fund manager can flexibly move from one sector to other sector and the other sector to like one more sector. Whereas in manufacturing fund from Access India Mutual Fund, the fund manager should stick to the manufacturing theme. Even if the manufacturing theme's outlook is dim, the fund manager is forced to invest only in manufacturing theme. He can't change the theme to technology or any other theme and invest. No, not possible. Whereas in a diversified equity fund, the fund manager can flexibly, dynamically change from one sector to other sector, one theme to other theme. He can do it. This fund can add more volatility to your portfolio because it's a thematic fund. It has got concentration risk. It can add more risk to your portfolio. If the manufacturing theme underperforms, there's a high probability. If it underperforms, then this can pull down your overall portfolio return. When you are investing in a thematic fund, you should know when to enter into that particular theme and when to exit out of that theme. It should be within your circle of competence. Then only you can do that. If you don't have time or if you don't have expertise to time the entry and exit into the manufacturing theme, then better to go for a diversified equity fund where the fund manager itself will decide what is the right time to enter into manufacturing theme, what's the right time to exit from the manufacturing theme. Based on that, he will align the portfolio. Fine, we have analyzed Axis India Manufacturing Fund NFO. We have seen what are all the advantages and what are all the disadvantages of this particular fund. Now is the final takeaway time. As an investor, can I invest in this fund or do I have to avoid this fund? It completely depends upon you as an investor. What kind of investor are you? If you are a first time investor or if you are a conservative investor, then obviously you should avoid this fund because this fund is going to invest in one particular theme. So it is not obviously for a first time investor or a conservative investor. For a first time investor or a conservative investor, large cap funds or flexi cap funds are better. If you are very particular about investing in manufacturing fund, if you have done your own homework and you feel that manufacturing themes outlook is brighter, then in that case you have got choices. You have existing manufacturing thematic funds which has got a track record, which is actually has performance and portfolio. Why should you select this NFO? Because in this NFO there is no track record, there is no portfolio. When there is no track record and portfolio, you are simply taking blind risk. You are not able to take calculated risk. As an investor, you are always supposed to take well calculated risk. Whenever you are forced to take blind risk, it is better to avoid that investment opportunity. If you are looking for funds for your core portfolio, then this fund is not suitable for you. If you don't know when to enter and exit from manufacturing theme, again this is not suitable for you. Before investing in these kind of schemes, it is better to consult your financial planner. Why? A scheme will have its own investment objective. An investor will have his own financial goals. This financial goal and the investment objective of the scheme should match. A scheme will have its own risk profile. An investor will have his own risk appetite. The scheme's risk profile and the investor's risk appetite should match. A scheme will have its own portfolio, different set of securities in which the scheme is going to invest. And an investor will have his own portfolio of stocks and mutual funds. By adding this new scheme, what kind of real diversification it is going to make in the underlying portfolio is something that has to be checked. If the overlap is higher, needs to be avoided. If the overlap is lower, then that needs to be considered for investment. Fourth is what kind of allocation. Even if you are satisfied with a particular scheme, before investing, how much allocation to be given in your overall equity portfolio, in your overall portfolio, that has to be decided. All these things will be easily decided by your financial planner. That is why we suggest you to consult your financial planner or a professional mutual fund distributor. If you need any assistance in investing in any mutual funds or any financial planning related queries, feel free to book an initial discussion. For the initial consultation, there is a link given in the description box. You can choose your preferred timing. I'll again meet you in yet another video. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now.